Okay, we're live. So Ron, another great trading day. The market was up over the weekend, opened up over the weekend, but settled a good 15, 16 points off the highs at the close. Would you say that the volatility that we've been seeing recently has made trading fun all of a sudden again?
It certainly has. That winning is always fun, and it was a nice day. The signals were dead on here. The guidance chart really gave us a big advantage, especially the sweet spots that we talk about and we like so much. And the reason is the sweet spot is a very low risk trade. It's a super risk reward ratio that's in our favor. And even though losses will come about, of course, there's no perfect system, but the losses are going to be much smaller. We really nailed a beautiful sweet spot trade right here, without pointing to here, which is about 8:30 Pacific, which comes out to 11:30 Eastern time. This is just like a classic what we look for. When you see this on any chart, April trend chart, this is what you want to look for because it's triple confirmation. It's super low risk. You've got a red bar, red 3-minute dot, which is the hidden resistance above the price. You've got the red 9-minute. Everything is just in total agreement, and boy, it just dropped big time right after that. Especially you want to take some profit when the prices pop outside the bands.
Yeah, that's a 10-point move right there.
Yeah, you got 10 points right here, and real quick, and just simply following following the rules and following the April trend indicators. So that was a really good one there, and then of course you could really nail some serious money right here because when they go outside the bands, they're almost always going to snap back. Great places to take some partial profit.
This is really what makes it worth it, right? I mean, so we've done a lot of content lately about the defensive plays, and really we're not doing anything different here, but suddenly it's making it all worth it. So this wasn't even the biggest day. Let's go ahead and pull up some of the days from last week, and we'll take a look at those.
Yeah, let's do that.
All right, so yeah, this was really what kind of kicked it off. This was Friday, September 9th.
Yeah, you wish every day could really look like this, but here's the key with the software and what makes it, because listen, when you have a big trend up or down, most indicators are going to work fine on that, but here's what makes April trend a little bit different is in here it doesn't look like much, but you're talking about like 5-point pullbacks. 5-point pullbacks, $250 per contract on the mini S&P, which is what this is. But yet the software kept us in it the whole time down because we had triple confirmation, red bar, red 3-minute, and red 9-minute, all in agreement with each other. And a lot of other indicators would have, and traders would have, gotten scared and got out on all these, there's a 5-point pullback there, a 5-point pullback there. But yet, if you use an April trend and just following a couple simple rules, I mean, you wind up a little bit of patience and some discipline. Really, got you some crazy profit because it continued to go down. We're shorting the signal right at the market open, which is right in here. Shorts at a 21.55, and technically was stopped out here 21 points lower, which is at the previous higher low of red dot. So now that's about 22 points total. You're looking at about $1,100 per contract.
It's not as evident in this particular chart that we're still playing as defensively, but I think we'll be able to see it really clearly if we pull up Monday's trading from last week. So let's go ahead and pull that up.
Okay, look at this chart here, Jesse. I like this because, again, similar to the other one, but this is on the upside. You had some really nice sweet spots in here. Here's about where the market opens up. And you don't want to start, when you're at the upper band there because it usually pulls back. But here's your sweet spot. Pull back down to the blue dot. The bars go from green back to blue again. You got yourself a really super uptrend there. And you certainly would always want to take a little profit when it does pop outside the bands. But that's a really nice move right over there. You're looking at about 15 points. That's a nice little trade in there. And here's, again, the beauty of the guidance chart, because it's just as important knowing when not to trade as it is knowing when to trade. Here's a perfect no-trade zone. You've got red dots above, meaning there's hidden resistance. You've got blue dots below from the 9-minute chart, meaning there's hidden support. We're saying don't risk your money. It's just too high risk, because with April trend, it's all about low risk. It's either low risk or no trade at all. And there's a perfect example of a no-trade zone. Over here, you see another no-trade zone. And what that does is it filters out a lot of false signals, and that's why we get so many less losing trades using the guidance chart.
So we're able to avoid the unnecessary losses. We're not taking the short trades there when the major trend is up, but it is still allowing us to take advantage of the continuation of the trend and really not hindering us from actually taking advantage of the big moves.
I mean, that was just a crazy day. You only wish every day could be like that. You don't want to miss those days.
Well, when the volatility is high, we certainly have been seeing a lot of days like that. Let's go to Thursday, which almost looks just like this. All right, so this is NQ. This was on Thursday, and I got this one up just because this was the leader on the way up, and that was from overnight.
Nice sweet spot there, and up and away it goes. Really, just kind of took off like a rocket there, and never went underneath the blue dots, which is our hidden supports, our protection. It's our defense, stopping it from going lower. So as long as you got the blue dots below, the key is to try and stay in it as long as you can, because you're safe. You've got some protection there, and then of course we're out on the red bar with the red dot. The 3-minute saying. It's a good chance it's going to go lower. But the 9-minute saying, nope, don't do it as far as going short. We would exit the long trade, but we're just not going to go short right over there. There's, your typical no-trade zone.
After that test of the support on that longer time frame, we get that sweet spot sort of within the sweet spot. They get the buy signal into the afternoon session, and that was a nice trade too.
Yeah, that one worked out really well too. That was, believe it or not, that was about another 15 points before the red bar, red dot come in, and we exited that trade. So,
So on NQ, that's what, $300 per contract?
I love that. That's nice. And then, of course, a no trade zone over here, the final hour of trading, where again you have the blue and red, and it goes right exactly to the red dot and stops the same way it went down to the blue support point. So it's, there really was hidden or invisible resistance and support there.
Well, in any case, we certainly hope for more volatility. If we do see a continuation of this is the kind of price action that we can expect. Obviously, continuing and always playing defensively, we're hoping